Hi, I'm the Brazilian investor, literally from Brazil. Today, we're analyzing a company with about 100 years of history, exporting to more than 86 countries, 9 factories, 3 port terminals, 10 ships, and 80% of its revenue comes from international market. But before we start, disclaimer. This video is for informational and educational purposes only. It's not a stock recommendation. I'm not a licensed financial advisor. Do not make your investment decisions solely based on a YouTube video. Do your own research or consult a certified professional before making any investment decisions. This will be a slightly different X-ray. I want to highlight a special point about cyclical companies, starting with a moment of reflection. Just kidding. Serious analysis with a little trap. Looking at these quarterly results, net income shows a loss of 7 billion, while in the previous year we see a profit of 14 billion. Would you say that the company performed badly or well? If your answer right now was the company did well, congratulations, you got it right, and you clearly know how to analyze a company, a cyclical company. However, if you thought, oh, they had a loss, so it was a terrible year for Suzano, well, you're not exactly wrong and not exactly right either. Quite the opposite, actually. Let's get started. Suzano has foreign exchange effects in its financial statements. So this loss was not realized in cash, but at the same time, it doesn't mean the company should ignore it. What really matters for Suzano is operating cash generation. In this scenario, the company improved a lot from 2023 to 2024, about a 40% increase from 11 to 16 billion. We'll talk about 2025 later. Small spoiler, commodity prices are falling. Well, to talk about Suzano, we need to talk about cash cost. Simply put, it's the production cost. Approximately 80% of Suzano's revenue comes from pulp, while 20% comes from paper. And why is this important? Because most of the variation in pulp prices is what will impact the company's results the most. And why is cash cost so important? Because the company cannot control the commodity price, but it can work to become more efficient and to reduce production costs. And Suzano is among the lowest cost producers in the world. Suzano's cash cost brings a competitive advantage, especially versus smaller companies, because during periods of low commodity prices, smaller players tend to suffer more and may even go bankrupt, which ends up strengthening the large companies in the medium and long term. Looking at pulp EBITDA margin, earnings before interest, taxes, depreciation, and amortization, we see a margin around 50%. And even with pulp prices currently falling, the margin did not decrease proportionally and remained stable. Going back to operating cash generation, starting with the pulp segment, adjusted EBITDA excludes non-recurring items, and I love these adjustments because they allow us to analyze a company in a clean way. Maintenance CapEx, meaning the investments required to keep the equipment and operations running, and finally, operating cash generation. It's not exactly free cash flow, but it represents how much money the company generates from its own operation. In 2023, we had 9 billion in operating cash generation in the pulp segment and 13 billion in 2024. It's a 52% increase. Even with a negative net income due to foreign exchange accounting effects, meaning no cash impact. In other words, with Suzano, we should not look at net income, but at cash generation, and I'll explain why in a moment. Before that, I want to quickly go through revenue and sales volume to highlight that Suzano has two segments: pulp, which represents around 80% of revenue, and paper, which represents 20%. Even though paper is not the company's core business, it's interesting to know that most paper revenue comes from the domestic market, Brazil, while pulp revenue mostly comes from the international market, dollar baby, oh yeah. Sorry, the Brazilian part of me got a little excited. Now I'll show you why you should basically never look at Suzano's net income. Just ignore it. You should focus on operating cash generation. Why? Because before reaching net income, money passes through a line called financial expenses, interest on debt. There is also financial income. The company has cash invested that generates interest. So it pays interest on debt and receives interest from financial investments. Now, what really hits Suzano is the foreign exchange and monetary variation line. In 2024, there was a total negative variation of about 17 billion, while in 2023, this variation was positive at around 4 billion. In a simplified example, imagine Suzano took a loan when the dollar was at 4 Brazilian reais. If later the dollar moves to 6 Brazilian reais, we will see an accounting difference of about 50% in the value of the debt. Accounting rules require the company to update the value of the debt in reais. This generates an accounting loss, even if no payment was made in that quarter. The main point is the company does not need to settle all of its debt at the moment of high dollar. When we look at the amortization schedule, we see that the debt is paid over many years in installments. For example, if one installment equals 10 billion US dollars, with the dollar at 6, with the dollar at 6 reais, this would represent 60 billion reais, leaving the cash. But if in the future the dollar is at 4 Brazilian reais, the same dollar installment would represent only 40 billion reais. In dollars, the amount paid is the same. What changes is the conversion into reais at the time of payment. That's why when the dollar goes up and accounting profit goes down because of foreign exchange variation, it does not automatically mean worse cash flow or worse payment capacity. It's largely an accounting effect. Accounting updates the value of the debt in reais, generating an accounting loss. So if we're not looking at net income, what should we focus on analyzing? Mainly adjusted EBITDA. It measures operational performance, excluding financial effects, taxes, and non-recurring items. It helps us understand efficiency, but it does not show how much cash actually came in. Free cash flow, it represents how much money actually remains in cash after keeping the operation running. Adjusted free cash flow tries to clean one-off effects to show the structural cash generation of the business. But keep in mind that it's important to understand what adjustments are being made. Well, what about dividends? Dividends are not as consistent as clubbings. They fluctuate much more since Suzano is much more affected by commodity prices. Hey Brazilian investor, why don't you give a special attention to dividend yield in your videos? Because it basically depends on the price you pay. Different investors are willing to pay different prices for many reasons: volatility, payment frequency, timing of payments, and the company profile itself. Growth companies, for example, tend to reinvest more instead of distributing dividends. Also, dividend yield is a snapshot of the past. I prefer to analyze future perspectives and work with projections. Many times we find companies with low dividends in the short term, but strong growth potential in the medium and long term. The real question for the investor is, does our life moment and risk profile allow you to wait and accept the risk that projections may not materialize? Now, highlighting some points about Suzano. The company mentioned during Suzano Day that a large part of current market capacity is already operating at a loss. If pulp prices continue falling, many companies may sharply reduce production, reducing supply. Meanwhile, demand continues to grow. This could create an imbalance between supply and demand and push pulp prices up again. Since Suzano is the largest and one of the lowest cost producers, the company would strongly benefit from a market recovery. Another positive point is that Suzano plans to reduce leverage. Most of its debt will only be paid after 2029, and with the cash the company has today, it can comfortably amortize debt until 2028. In other words, the leverage situation is under control and trending well. In summary, fundamentally, Suzano looks like a cheap asset, a company that tends to remain strong in the market. Leverage is manageable but can still pressure results. Demand is resilient and tends to grow with the expansion of the middle class in China and India. The growth of e-commerce and the replacement of plastic with paper also helps the company. The main competitive advantage is its very low production cost. One reason for this is the relatively short distance between forests and mills, good logistics. And with pulp prices currently low, the perspective is for strong growth in the next cycle. Thank you for watching. If there is another company you'd like me to cover, let me know in the comments below. Well, the channel is just getting started, so there's a good chance I'll see your comment and feature your idea in an upcoming video. So let me know what you're thinking. See you next time. Brazilian investor, literally from Brazil. Muito obrigado, um forte abraço e até. Até a próxima.